Welcome back, traders, to another video. If you haven't subscribed, make sure that you do. I've realized that 90% of the people that watch my videos are not subscribed. So if you haven't subscribed, make sure that you do. Also, follow me on Instagram. I post daily updates on trading and I have a ton of content on there as well. And if you want a free forex course, make sure you check out the link in my description. I just made it. Now, without further ado, let's get into the video. I told you guys this so many times, timing is the most important thing when it comes to trading, and I'm going to show you why in this video. So there are key times in the market where there are very clean reversals to spot, and that time is 6:45 a.m. and 7 a.m. PST. Those are like the key times that I look for, and I'm looking for those reversals on the minute 5 and the minute 15 time frame. A lot of the time they will actually go in confluence where the minute 5 might have a reversal candle and then the minute 15 might have one, and they just match perfectly for a good sell. And that's exactly what happened today on US 30. So looking right here, you guys can see that we do have this beautiful shooting star candle, and it is a bearish shooting star candle because it has a wick to the upside. We can see that we are already in a downtrend since like the London session opened or ended, and then the New York session opened. We were in a downtrend. So overall, my bias would be I'm going short. And that's the thing that I usually look for when I first start trading is like, okay, what kind of trend are we in? And you can look at it on lower time frames and overall see how the candles are trending down or up. Or what I like to do is go to the 1 hour time frame, and I could usually look at the candle that closed from 6 a.m. or 5 a.m. to 6 a.m. and see how that candle closed. If it's a reversal candle, a bearish candle, whatever it may be. So this was the 4 to 5 a.m. Then we had the 5 to 6 a.m. and then the 7 to 8 a.m. So right here, we got a lot of confluence, and that's what I'm telling you guys. Don't just use one time frame. Usually what I'll do is, let's say it's going to be 7 a.m. in 2 minutes. I'm going to look at the 1 hour time frame. I'm going to look at the minute 15, and I'm going to look at the minute 5 and see if they're going in confluence. And obviously higher time frames have a lot more power. So if there is a reversal on the 1 hour time frame, then it's most likely going to be a very good trade that's going to play out. Especially when we have long wicks to the upside or the downside, that's showing us that overall, we can see right here, this was open in the market at 6:30 to 6:45, and it pushed up. And then one more time, it pushed up. But we have this long wick right here. I'm going to show you guys. I'm going to zoom in. We have this candle with a very long wick right here. And that's showing us that people were buying at this point. All in this wick, people are buying. So there's a lot of buy liquidity right there, meaning that there's a lot of buyers at that point in time, and they're expecting the market to keep going up. Well, the market makers, the one with the real money that control the market, they're like, nah, screw you guys. We do not care about you. We're in the business of taking your money. We're going to push it up, and you're going to get FOMO, fear of missing out. That's why I tell you guys, it's very important to wait for the candle to see how it closes to get confirmation on what's going to happen next. So they're all like, okay, let's push it up. Let's get everyone to buy, and then we're going to drop it. So if you would have waited, here's that key time, the 6:45 to 7 a.m. candle. Nice reversal candle, rejects our 20 moving average, and then right after that we have a nice push down, really nice push down. So I don't trade Wednesdays, but I saw this trade. I was like, okay, Wednesdays usually are very choppy, so that's something that you also need to keep it in consideration. When we have really good trading days, like really big moves, the next days might be a little slow or choppy, so take that into consideration. But if I were to have traded, I would have waited for that 15-minute candle to close. I would have been patient, waited for a reversal candle. Boom, I saw it right there. Then I'd say, do you know what? I'm going short, and I'm going to sell by market execution. My stops are going to be right there for 1,000 pips. Then I'm simply just going to target this low right here. I want to have at least a 1-to-1 risk-reward ratio, so let me go for 2,000 pips right there. That's where my TP would have been. I would have entered that trade by market execution, and boom. That's how you know you're on the right side of the market, when you see a quick move away from your entry. Very, very quickly. Obviously, there's one more chance to get in if you missed it right at the beginning of this 15-minute candle. It jumped up probably around 400 pips, something like that, and then just took off to the downside. Now let's go to the 5-minute chart and look at this exact setup. Okay, so here it is right here at 6:55. This is our entry on the 5-minute. If we saw this candle close at 6:55, that would have been a perfect bearish engulfing, because we have this bearish candle engulfing the bullish candle. And what do we have? 2 wicks to the upside. So we like to call this setup right here tweezers. It looks like little tweezers that you squeeze to get a splinter out of your hand, something like that. So we have the tweezer top right here, and then after that it kind of pushes down, but the next candle, it has that one more reversal or one more retest it, and then just takes off. Within 15 minutes, just tanks, explodes to the downside. So overall, all this is right here is this push up. It's a false breakout. They're like, all right, let's get all the people in for buys. They think it's going to go to infinity and beyond, but it's really not going to do that. We're just going to push it up a little bit. We're going to do a quick, sudden, fast move to get them all intrigued, all excited to enter in their buy positions, and then we're just going to drop it down. And we're not going to do it fast. We're going to do it slow, so they think they still have a chance to be in their trade and to actually make profits. But yeah, we're just doing it slow to make them accumulate more orders so we can screw them over even more. That's how the market makers work. And once you come to that determination where you're like, do you know what? Trading isn't just about like making a trade. Like, you have to understand the whole psychology behind what is going on. Like 6:30, that's why timing is important. I'm going to explain it to you. 6:30, market open. They're most likely going to do a false breakout. They're going to push the market in a way that it's not actually going to go. So they're probably going to push it up real quick. Then they're going to make a reversal candle. That's the key time, 6:45. Look for that reversal candle at 6:45 or 7 a.m. Once you see that, then you know, okay, the false breakout is over. Here comes a reversal candle at 6:45 or 7 a.m. Between those times, this is when I need to start looking for the real move. And especially if you already see that we're in a downtrend, like, guys, this is just a little push up because they know a bunch of people sold before the market opened. So they say, okay, this is the current high on the trend that we're in. So what we're going to do is push it up. We're going to stop everyone out and then entice them to go long and buy, and then we're just going to go down with the actual trend that we are intending to go to. That's how it works. You guys got to understand the psychology behind it and why they're doing these certain things. And once you start understanding that and how trading actually works, then you're like, wait, what? This is so easy, because you're not going into it as a guessing game. You know exactly what's going to happen. Hope you guys enjoyed this video. I'll see you on the next one. Peace out.